We've had a significant rally on the back of the correction from late last year. The liquidity has remained ample across both central banks, but also from Asia, the major as in the Fed, the ECB, but also Asia. And I believe that has been the key cause for the rally. However, I'm worried that volatility is at excessively low levels. Volatility is to the levels where we were before the correction started last October, and that concerns me. So I'd expect the second quarter to be a little bit more volatile and more range trading in terms of the stock markets rather than continuing rally.
Hopefully in the second quarter, we're going to get a resolution on Brexit. You would have just heard Willem talking us through everything that's set to happen today. Would it be fair to say, though, that the UK market has remained, I guess, fairly resilient despite all of this uncertainty when it comes to what's going on with the decision to leave the Eurozone?
I think that sterling tends to be the canary in the mind as the indicator of the sentiment within the UK. And we have had sterling rally significantly over the last few weeks as the market started to price in a softer Brexit. My issue with that and why we turned negative sterling earlier this week is that the market, in our view, seems to be mispricing a potential Labour government. And whether we get the soft Brexit, which in our view has been that May will drive this through using her two sticks, but even if she does, number one, we know that she'll have to resign at the end of this process, and number two, we're going to have more pressure from the public towards a general election. The person who replaces May will be very hard Brexit. In terms of the next stage of the negotiations. And I think this will create resentment across the public again, and we're going to lead towards a general election.
I know that a lot